Well, howdy there folks, and welcome into the first YouTube video I have ever recorded in the new Arizona house. So I am super thankful to do this video for you guys in this new house here today in Arizona, and I'm super thankful because today is the first time ever the public account just hit $1 million in their total. Okay, so I thought, okay, this is a huge video. This is a big deal on two different fronts. First, YouTube video at the Arizona house. First time we've ever hit and closed over $1 million in the public account. So I want to go through today exactly how this has transpired. We've done this from, built this account from scratch, a brand new account, to over $1 million in just over 3 years. And so I thought, what are the best kind of secrets I can give away in this video? And let me explain each of these, because you can emulate something somewhat similar. You might not be able to go from a scratch account to $1 million in a little over 3 years, but can you go from, a scratch account to 50,000 in a little over 3 years, or 100,000? Or heck, maybe you can even do better than this. At the end of the day, I want to kind of give you the secrets behind this, and in my opinion, how this can happen and how it can help you guys out. I want to do a value-packed video, so I'm going to give away an immense amount of value, absolutely free for you guys here today. The only thing I ask in return is that you smash that thumbs up button, okay? I very much appreciate it. That's all I ask from this video, okay? And during this video also, we're going to get into the new set of big dogs I have in the public account now. There's 3 new stocks I've added aggressively over the past, let's say the past few months. And I'll tell you about those 3 stocks, and those are kind of the future of the account. Although a lot of these stocks we're going to get into here today, I still hold, and they're still the present of the account. But these next 3, I feel like these other 3 are going to be the big dogs of the future of this account. Okay, so I hope you guys really enjoy this. If you want to check out Stock Hub, I'm probably gonna have that as a pinned comment as well. That's our free Discord chat. So if you want to chat with myself and a ton of other investors out there, literally, I think we have 23,000 plus now as far as investors in there. All we do is talk stocks all day in there. It's absolutely free to join. I'll have that as the pinned comment. It's also linked in the description. If you want to try to apply for my private group, I'll also have that as one of the pinned comments down there as well. Alrighty guys, so let's start getting into this all the way across, okay? So first thing, before we get into this, okay, there's 3 things you gotta keep in mind, okay, that call them the holy grail of investing, okay? One is, if you're gonna have a successful stock account, you've gotta put money in, right? You've gotta have money to put in to buy on dips, to buy stocks you love. So if you wanna grow to a large amount, whether it be 6 figures, 7 figures, the amount of money you put in, important, right? Time is important. Now in this circumstance, we haven't had a lot of time to play with. A little over 3 years in the investment horizon perspective, that's a really short amount of time. Usually if you're thinking about building out a portfolio, you're usually thinking about building it out over a 5, 10, 15, 20, 25 year span. This account still is a baby, actually. This is still a baby account. It's a little over 3 years old, okay? That's the best way I can describe it. When you talk about mature stock market portfolios, they're usually portfolios that are 10, 15, 20, 25, 30 years old, okay? This is a little over 3 years, okay? But time, super important, okay? And then the percent return you get on your money, super important, okay? These are the 3 everythings, okay? That's how you build a successful account. Now, you always pretty much need 2 of these things to, get an account to a very good place, okay? What we've been fortunate enough to have, although we don't have much time, right? We've had money to put in, okay, and buy a ton of great stocks and build out positions, and we've gotten some ridiculous returns, okay? As far as the 1-year rate of return for the public account, and this is calculated by Fidelity Investments, not calculated by me just throwing out some number. This is by Fidelity Investments, okay? The 1-year rate of return for the public account is 91%. I'll even show you screenshots, okay? The S&P 500 is up about 9% roughly year to date, okay? So, to say we're crushing the market would be, a little, modest. Let's just put it that way, okay? And then in 2019, we also got a 91% 1-year rate of return in 2019, okay? So the last few years have been amazing for me with just like a long list of phenomenal stocks, okay? And so we've been fortunate to have the money to put in the account, to build the positions, and getting ridiculous gains year after year, okay? But I mean, even if you weren't getting that good of returns, then you just need time on your side. But obviously not everybody has a million years, because I mean, a lot of you guys, I see it all the time, a lot of you guys look at it and you're like, man, 30 years from now, 40 years from now, 50 years from now, who cares how much money I have? I'm gonna be 78 years old if I'm even still alive, right? And so a lot of you guys wanna have money in your either 20s, but a lot of you guys wanna have money in your 30s, 40s, 50s, like when you can actually still enjoy it, and hopefully you're gonna be around to enjoy it, right? So those are 3 amazing things you need in a stock market portfolio. And if you have those 3 things, like, the world is yours when it comes to investing, okay? So let's start going through these 12 secrets. Let me explain all these, and then we'll get into kind of the new 3 big dogs, okay? Secret number 1, I never dreamt about having $1 million in this account in a little over 3 years. This is so dang key, okay? By the way, look at the shirt I'm wearing. This is 12 years old, okay? And by the way, I didn't even buy this shirt. I got it given to me for free because I volunteered my time. Isn't that great, man? That's what you call a good return on investment right there. I don't know why that would just like hit me randomly. Secret number 1 though, never. So, oh gosh, so many times people get so hyped out over numbers, and they put these ridiculous numbers out there, and they're like, I'm gonna hit $1 million in my portfolio. I have nothing in my portfolio now, but I'm gonna hit $1 million in 3 years, okay? When you say things like that, it sounds ridiculous, okay? There's nothing wrong with having confidence in yourself, but there's a little difference between having confidence and a little delusion, okay? And I'll be honest, I would have felt I was being delusional if I said this account that I was starting a little over 3 years ago was going to be at $1 million here today. I'll be completely honest, okay? I never expected this. $100,000? Possibility. $200,000? Possibility. $1 million? No. Okay. No, I never dreamt it. And so one of the good things about not putting a set amount that I expected is I never put that pressure on myself to make short-term decisions, because the enemy of building out stock portfolios to really large numbers, the enemy of that is at the end of the day getting too caught up in short-term goals and making short-term decisions to try to reach those short-term goals, okay? That can destroy an account more than anything, okay? So this was never in the cards, this was never in the plan. All I looked at was I started a private group, you know, probably 6 months or something like that, 6-9 months before I started the public account. And what I found is I was just like, a lot of people like want to see me build out an account. They want to see me actually like putting my money where my mouth is. If I'm going to go out there and ask people to, you know, give me money for my knowledge, it's a little more powerful if I can show them I actually put my money where my mouth is and I actually do the things I preach for others to do out there. And so I said, let me start this public account. We'll get this up and rolling. Everybody's going to be able to see every single trade I've ever placed in there. Every single member gets to see, like literally it's documented with screenshots and everything. Every single move I've ever made, every single buy order, sell order across the board. And I was like, this is just going to be a good learning thing. The fact that it's at $1 million now is just like, I'll take it, okay? I'll take it. It was never in the plans, okay? Step number 2, this is really, really key, okay? Dips, baby. I have been a big buyer in dips, so I always preach to you guys, always keep some cash around. Guess what? I always keep some cash around. And when I deploy cash, it's usually right during a dip or after a big dip in the market or individual stocks. So for instance, fall and winter of 2018, I was able to build some very nice sized positions because the market was going down. The market went from, I think, like Dow 26,000 to like 21,000, like real quick, like October, November, December. I'm not sure if you guys remember that. It was like 2018. And the market just went down, down, down. And I was able to buy a lot of really good high quality companies that were just being beaten down. And at that time, everything was just being treated equally. Everybody was hating on every stock. And I got to pick up on a lot of really good deals, okay? Random, like the amount of stocks I've been able to buy in this portfolio that were random stocks that I loved, and for whatever reason they came out with a bad earnings and all of a sudden stock went down 20-30%. I was like, oh, I like that stock. Let me look at the valuation, let me look at the company in depth. I like this one, let me start buying. Like the majority of stocks I've gotten in probably in the public account were stocks that went down 10, 20, if not more percent than that, 30% plus before I got in them. Very, very key, okay? And also, Rona. So after everything kind of stabilized, I was looking at things and I was like, okay, what's gonna happen here with money velocity? And I started seeing things kind of coming back. I was like, okay, it looks like we're not gonna have like a Great Depression or something like that. It looks like things are gonna start to bounce back. And I started deploying money and buying a lot of really good quality companies right after Rona. So, well, I mean, obviously we're still going through Rona, but I'm talking about the massive dip in the market, which was a scary time to be investing because money velocity just boom, shut off. And it's like, what happens with the economy? What happens to corporate earnings? It was a scary time, but once I kind of saw things were stabilizing and we're kind of on the upward again, that's when I started deploying a lot of money and was able to get some really good stocks. So if you want to make a lot of money in the market, always keep some cash around. Doesn't mean all your money in cash because that just gets devalued over time, but always keep some cash around. And don't be afraid to buy the market when there's major dips or when stocks you love for the long term dip big and you love that stock, okay? Whether you own it before or you're gonna own it in the future, okay? So that's first two secrets. Secret number 3, right? In 2018, I figured out, I'm like, okay, I'm getting this account up and rolling. If I'm gonna build a portfolio the way I wanna build a portfolio over the next few years, I need to set up a top 3. I need to have 3 really big companies that I love for the next, let's say 5 years or so, okay? And so what I wanna build those around is companies with amazing balance sheets. The FB, Facebook, okay? This was the main position I built the account around. Facebook's got a top 5 balance sheet in the entire world of any company. And so I said, this is a profit beast. People are going to continue to use Facebook and Instagram, and sure enough, that has come true over the last few years. Actually, more people are using Facebook, Instagram, WhatsApp than ever before, which are all properties owned by Facebook. Skyworks Solutions, one of the best balance sheets of any company you'll ever find. Cash loaded, usually around $1 billion cash, no debts. Cirrus Logic, cruisy doozy, usually like 400 million or so in cash and no debts. And so I said, these are the top 3 I want to build my portfolio around. These are the 3 I feel comfortable with. And that's exactly what I did. And guess what? Those positions got nailed. Remember I talked about that big drop in the market, fall and winter time? Go look at the stock price of Facebook, Skyworks Solutions, and Cruisy Doozy in around like December of 2018, okay? And look at their stock prices today. That's all I'm going to say about that. And I was fortunate enough to buy some great companies and built around a top 3, okay? Secret number 4. I don't even know if this is a secret, okay? Tesla. This stock is my best stock of my life, okay? There's no other way of putting it. The gains are ridiculous. I think we're up 800 and 900% on the stock, okay? I've never gotten that big of a gain on a stock, okay? I've been fortunate to hit a lot of home runs over time, a lot of stocks that went up 100% plus. But I can't ever remember a stock I held that went up 800 to 900% or so, okay? So Tesla has no doubt been a beast. And this was not one of those top 3. This was like a 4th or 5th biggest position, I think, in the public count when I built this out. But Tesla, guess what I did? Remember I said about random stocks I would buy when they would dip? Tesla, I bought that stock for like a year straight. It would dip some, I'd buy 10 shares, 20 shares, 30 shares, whatever. Just kept adding shares here and there when it would have a major dip. Built it into, I think, my 4th or 5th biggest position. And over time, it's just gone up so much that it became my biggest position. Not because I put a lot of money in it, I didn't. It's just because the stock was unreal amazing, okay? I took a risk, which Tesla, when I invested in it, was more of a risk. And so I took a calculated risk in Tesla, and it paid off like I can't really explain. And it's not like I'm the only one that's prospered from Tesla stock. I mean, there's been a lot of people in my private group that got carried to 6-figure club, 7-figure club on the back of Tesla, okay? That stock's been tremendous. Everybody has been treated well by Tesla stock except short sellers. That's it, okay? So yeah, Tesla. Thank you, Tesla, okay? Step number 5 is really important. Take L's and move on. I've done that successfully. 2 stocks that come to mind that I took L's on, meaning I lost money in that stock and I sold for a loss, okay? 2 stocks that come to mind, 2018 was US Steel. I looked into that company and they were making money hand over fist at that time. And the valuation had come down, I think, to like $20 or so. And I looked at that company and said, this is really attractive. And then shortly after, a few months went by, maybe a couple quarters were reported, and I just realized everything that was really good with US Steel was getting worse and worse and worse and worse and worse. And I realized, I started running numbers, and I'm like, and this, where I see US Steel going, I think they're going to start taking losses. When I got in that stock, they were taking massive profits. And I looked at this one and I was like, I think they're going to start taking losses again, the way I'm starting to run out of these numbers out. And I moved on. I cut ties with it. I lost money. I don't know if I lost like $3,000 in that stock or whatever, but I cut it when I cut it, and that was the best decision. Because after that, the stock went down like 70%, I think. Like some insane number, okay? So instead of saying, oh, I'm just gonna be prideful and hope it works out, I said, let me take my L. And it's embarrassing to take L's, but you're gonna take L's in the stock market. You're investing in 15 different stocks. It's gonna, one or two are gonna be bad. It's just like facts. Like either it's gonna be because you made a bad decision or bad luck happened. CCL, that's more of a bad luck situation. What am I gonna do? Like I invested in that stock right before a once in 100-year health event happened. It was the worst time to invest in that stock. I sold that stock off at like, I think around 16 or so, roughly, somewhere in there, and cut my ties with that company just because I looked at it and I said, okay, the balance sheet has gotten tremendously worse from when I bought in that company. Their revenue numbers are going to be awful for years to go. Like even when they come back, they've sold off so many ships and cut down so many lines that, you know, the revenue is not going to ever, you know, or it's not going to be the same anytime soon, if ever. Neither is net income, and it's a way worse balance sheet. Plus, we don't know what's the deal with Ronin and how long this is going to last. And I just looked at that and I said, I got to cut it, man. It was just bad luck. Sometimes you're going to have really good luck. Tesla's a case of really good luck. Sometimes you're going to have really bad luck. CCL is a perfect example of really bad luck. Took my L's, cut them, and there's no shame in that game, because if you're in the stock, like Warren Buffett sometimes gets in bad stocks and loses a few $1 billion. So everybody's going to do it from time to time. You just got to swallow your pride and you got to say, didn't work out, man. Cut it. Cut it before it gets a lot worse, okay? Like when it comes, and you don't just judge by looking at if the stock's down. You look at the business fundamentals. That's what it comes down to. With X and CCL, I looked at the business fundamentals, and I said, this isn't what I invested in, man. And I got out of those. And that's a decision to be made. If the business fundamentals are great and the stock price is going down, you don't sell. You usually buy more, okay? There's a difference. Sometimes there's great businesses that the stock price goes down. That's when you buy, okay? But when the business fundamentals are really bad and they're getting worse and worse, that's when sometimes you just gotta say, cut it, man. Cut it before you take a much bigger loss than you ever expected, okay? Secret number, wait a minute, we got 5 secrets, okay? This is a video on the fly. I'm not even gonna edit this out. I'm just gonna keep it in, okay? So another 5th secret, okay, is dividends reinvested. Any dividend money I've received in that account, I plug it right back into stocks. I don't take that out and say, let me go pop bottles at the club or something like that, or let me go buy a new t-shirt. No, I'll just wear the t-shirt I've been wearing for over 12 years now, okay? Dividends, reinvest those, okay? I didn't count that maybe as a secret because it was such a simple one, okay? Secret number 6, tax man. Very key, okay? Remember, all these stocks I have massive gains on, a lot of them I haven't paid taxes on yet. If I went ahead and sold off all those stocks and had to pay those taxes, we're going from $1 million down to like 800K or so. I don't know what the specific number is, maybe 900K. I don't know, I got a lot of taxes I have to pay at some point. But I try to sell as few and far between for short-term gains because I'm in the highest tax bracket, okay? So if I sell for a short-term gain, meaning a stock I've held for less than a year, I have to pay my super high tax rate. If I hold it for over a year, I pay like, I don't know, I think it's like 19% or something like that, capital gains. Very nice. I'd much rather pay that than the other number, okay? So I'm not one to just get out of stocks. Like sometimes it happens, and if I got to take a short-term profit, I'll take it. But ultimately, I usually take long-term profits because, hey, especially if I love a company long-term, it's like everything's geared in my advantage. I'm a long-term investor in companies. I love holding companies ideally for years. And so if that's the situation, I pay way less taxes than a guy that's trying to jump in and out of stocks or something like that. So tax man on my side, thank you. Secret number 7, okay? We just spoke about, sometimes I do take short-term W's, and sometimes I do. Usually it's when a position's not built out, okay? So let's say I like a stock a lot. I start buying it, and I get a position started, and it just starts going up, 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 up. Next thing you know, that stock's up 10%, 15%, 20%, 25%. Sometimes I'm just like, I'm just getting out of it. I'm just gonna take the profit and get out of this one. Because a lot of times I'll have another stock that I love a lot more that might be getting beaten down. And so all of a sudden I look at a risk, kind of a risk reversal, and I'm like, okay, that stock just went up 25%. I haven't got my position built to where I want to build it. This other stock's down 25%. So now we're getting like, what, 50% difference? And this other stock I might even like a lot better, valuation-wise, business fundamentals. And so I'll go ahead, sell that stock, take the short-term W, redeploy that money. So sometimes I will take short-term gains, but I try to very few and far between. I'd much rather take long-term gains. But with that being said, there's a big difference between saying I've always got to take long-term gains and sometimes you just got to take those short-term gains, okay? Before we get into secret 8, let me just see where this video recording's at. Oh, we're looking good, okay? Secret number 8, home runs. There's no way this account's at $1 million right now if it's not for the fact that we've been able to hit so many home runs, okay? I'll show you a screenshot here just of the home runs we have right now in the account. Never mind like how many gains we might have taken from some of those stocks or other stocks we might have sold out that were home runs. Like Tesla, right? I mean, you see the gain, like it's crazy. Elf on a Shelf, right? The Planet, Upwork, Fizzy Get Dizzy, Cruisy Doozy, all home runs, okay? Meaning those stocks are up 100% plus. 100% plus, okay? So, you need a lot of home runs if you're going to put some amazing numbers. And obviously, if you're going to get a 91% return last year, 91% return this year, and we'll see where it shakes out. There's still another month left in the year. It could be higher than that, it could be lower than that. We'll see. But if you're going to pull off those type of returns, you need plenty of home runs in your account, okay? Because remember, you're going to make a mistake every once in a while. And so if you can make a mistake and then come through with a home run, like the mistake was a joke because you just hit a massive home run that, just got your account way up, okay? So we've been fortunate to just knock a lot out of the ballpark, and I'm thankful for that, okay? Secret number 9, I like to always have my money in the best companies possible without being under-diversified. That's a big but, okay? But without being under-diversified, because technically you could have all your money in just one stock, okay? Sometimes that one stock's gonna go bad, okay? I'm just gonna be honest with you. Like sometimes it goes good and you can make, it's like, oh, I'm a genius. I put all my money in one stock or 2 stocks and they're doing so good. And sometimes I've been there where that one stock, your best stock, your biggest stock, flops. Nothing goes right. You might have a bad luck situation. The management team might mess it up. It happens, okay? And if you're in this for 10, 20, 30 years doing this stock market investing, stock picking, like, dude, it's gonna happen from time to time, okay? It is what it is. But I always like to have my money in the best stocks possible without being under-diversified. So I try to hold always at least 10 stocks in this account. Right now, I'm probably somewhere around 15 stocks in the public account, okay? Somewhere around 15 roughly. But remember, there's $1 million in this account, okay? I don't want to get to a place where I hold 38 stocks in this account or something like that. The reason being at the end of the day is that's just way over diversified in my personal opinion. Like at that point, you might as well start buying S&P 500 index funds or something like that if you hold 38 stocks. Like it's just insane. And I've seen other people's portfolios where they hold 50, 55 stocks. I'm like, my goodness, you're not able to invest much in your biggest positions if you got money spread across 55 different companies, right? So I always like to have my money in the best companies possible. Secret number 10, accountability, okay? This is a big, big secret, okay? I don't think I've ever revealed this to anyone outside of my private stock group ever before, okay? This is God's honest truth. You wanna know which stock account I have is my best performing. So I have a few different accounts. I have the public account, right? This is the one where everybody in the private group can see every single move I make in there. I have my main private account, okay? I have my retirement account, and then I have a few other accounts, but like those are the 3 main ones, okay? Guess which one's the best performing of all those? This one, public account. Why is that? A lot of times I mirror a lot of the positions, 95% of the time. The reason being is accountability. I think through things so much deeper because I know everybody sees my portfolio in there and there's, 2,000, 3,000 members or whatever in there, right? And I know every single time I buy or sell a stock, everybody's gonna be asking me why I did that. And I better have dang good reasons, okay? And so when it comes to that, I have to think everything through like 10 times, okay? Whereas if you hold a private account, you know, and you got money in a different account, like a lot of you guys, no, you're not accountable to anybody, right? You could do whatever you want. You can sell out all your stocks right now. No one's asking you questions. No one's judging you. But for me, if I go ahead and sell Tesla stock tomorrow, you better believe I'm gonna have 2,000 plus DMs from every single person in that private group saying, what, you're selling that Tesla? What's going on? I better think that through like for 3 days straight, okay? So this allows me to just use my brain and think over and over again, rather than a situation where I can make decisions based upon emotion. That's why this is my best account. That's why this account had got 91% last year and outperformed my other accounts. That's why this account is outperforming my other accounts this year. My other accounts are doing really, really well. Like I think my main private account, last time I checked, was like 80-something%. This one's at 91. And 100% I feel like it's only because of accountability. Because in those other accounts, I can make an emotional decision and I don't have to answer to anybody. But my goodness, if I make a decision over here, I better be ready to, you know, answer a ton of questions about it, okay? Accountability. Let me set this timer to record again. Alrighty guys, secret number 11 up here. 12 years in, okay? There's no way I built this account to this probably without being in the market for a good amount of time. Because remember, I'm self-taught. I have never had somebody like be able to run me through a bunch of stuff and be like, oh, you need to do this. You need to stay away from this. You need to go do that. I'm self-taught 100%. I wish I had like myself to teach myself 12 years ago, because my gains would have been way bigger off the jump. Like I would have been getting like ridiculous gains within my first few years, rather than like 2008, 2009, 2010. I didn't really get rolling in a big way until 2011. Like it took me like 3 years, if not 4 years, to really start getting up and running and know what I'm doing. And never mind that, there was other mistakes I made along the way, 2015, because I didn't have anybody to like guide me. But I'm 100% self-taught, and I'm 12 years into this. If I wasn't 12 years into this, I wouldn't have gotten these gains more than likely. I just have a lot of experience. I just know how to identify good business from a bad business. I know how to identify a good management team from a bad management team. I know how to judge financials, and I'm just like, I'm in a really good place as far as like my investing abilities and kind of knowing which stocks are gonna hit and which ones aren't. And even with that, I'm still never gonna be right 100% of the time, but dang, I'm gonna be right probably 90% of the time, if not more 90% of the time. And if you're right 90% of the time, if not more than that, you're gonna make a whole lot of money in the stock market. That's all I have to say about that. And I'm fortunate to have, you know, a good amount of experience. And the great thing is everything's cumulative. So all this stuff, I'm getting just better and better and better and better and better. And you know, if another 12 years go by, and I'm fortunate enough to, you know, still be here and still, you know, have my faculties and whatnot, you know, I can only imagine where I'll be at that time with my investing abilities. So yeah, everything's cumulative. You know, the knowledge just continues to build, all right? Secret number 12, all gains reinvest it. Very key. I don't pull out money out of that account and go do something else with it. Every time I take a gain, let's say I take a, you know, a $50,000 gain on a stock, that $50,000 plus the principal I had put in that stock is going into the next stock. Always reinvesting the gains. That's how this account got built to $1 million plus account in 3 years. Adding up all those things together has produced, you know, crazy results. Results I could have never dreamt about in that particular account, okay? Now, told you guys, I have 3 new big dogs here, okay, that I'm gonna be riding with for the next several years. Now, Tesla, you know, Facebook, Skyworks, a lot of those stocks, I'm still planning on holding for now, and I'm not planning on getting rid of those stocks. I'm just thinking about the new generation of stocks I have, okay? The new generation. Dropbox, Beyond Meat, Wynn Resorts. Those are the new generation. Those 3 stocks, I think, are going to be the stocks that if we're fast forward 3 years from now, 2-3 years from now, I think those stocks are going to be huge winners for me. I really truly believe that those stocks will be, you know, up. I think they're going to be in this category. Let's just put it that way. I think all 3 of those stocks will be home runs if we fast forward 3 years from now. Time will tell. We'll see. We'll see. That's all I'll say. So I hope you guys enjoyed this as always. Hope you got a ton of value out of it. I gave out a ton of game in this video. If you don't mind, smash me a thumbs up. That helps out the YouTube channel massively. That's all I ask for this video, guys. If you want to check out Stock Hub, absolutely free to do that. You'll probably love it in there. Be able to chat stocks with 20,000 plus other long-term investors in the market. And other than that, guys, hope you enjoyed this. If you want to apply for my private stock group, you can do so down in the description. I might also have that like as a pinned comment, maybe the second comment down there or something like that. I think they're actually doing a deal. I think they're doing something for Black Friday around like Black Friday week and the week after if if you're able to actually join the group and whatnot. I think they're doing something like 2 free lessons with one of our 7-figure coaches or something like that, or 6-figure, 7-figure. I don't want to say too much because I don't want to put words in their mouth, but I think they're doing something like that for you guys. So if you're interested in that, definitely check it out, all right? Thank you for watching and have a great day.